This is Trader Genius, where the data comes first. You've got Jess and Rob for our weekly trade reviews for 15 November 2019. And we will start with an overview of the multi-decade market. And right here on this week, these candles are 1 week of trading apiece, and Dow is hitting 28,000, just $5 over 28,000 for this candle, and we still have green signal on the bottom. Jess, what is that chart telling you?
Okay, we're at a new high, so we're gonna end up seeing where people's sentiment is. It's always nice when we hit a new high, but also these new significant moments also cause potential signs of resistance. So like in early 2018, you saw that turnaround, and then we saw it again when we hit 27,000, and we've been dancing around that 27,000 mark for quite some time. And finally decided to make it up to 28,000. So that is exciting. What I really like is this sustained green down there at the bottom. That's what's been a positive indicator. We haven't seen any red since mid 2019. So that's a good sign that of some growth in the market, albeit slow, but not looking down or very choppy. As far as the green and red signals go, we've had really nice kind of green signal for really the most of this back half so far of 2019, and let's hope it continues.
Ideally. Let's take a look at the long-term market chart. And this is the monthly view, and it's just a line chart. So we've got the average of the top 2,500 stocks showing a nice upward trend on a green background. Bounces off of what we just saw on the Dow chart.
Yeah, and the Dow chart's just one stock or one indice that's making up stocks, and this is looking at 2,500, and it's all looking up on the monthly, so it is a really positive sign. When we do have these positive signs on the longer term, I always like to keep an eye on a little bit shorter terms to see if there is a turnaround happening. And so let's jump down to the weekly and see if we're still green on green. We are green on green, and we have finally peaked our head above this resistance. We've been channeling really since early February, and we're looking like we may come out of it. You know, it's kind of like Groundhog Day. You know, the groundhog pokes his head out, and something about seeing its shadow and how long winter is going to happen and all this kind of stuff. That's what I always kind of think about when we see them poke their head out of these resistance. Is it going to stay? Is it going to go back in? Who knows?
Yeah, one of our alumni, she calls it the bee in the window, and I always love that. So bees trapped inside between the screen and the window, and it just bounces back and forth, and finally got to open the window one way or the other, or it's going to escape the screen. But yeah, that activity, and down to the daily, looking nice. These the daily and weekly are off of 6,300 stocks. And for our daily trade analysis, we're just going to go straight to the Friday, November 15th edition of the Daily Dozen. Drag that over. We'll just take a quick look at each one and just talk about what we like and don't like about the charts that we see. And these are going to be daily charts for each one. So let's go from top to bottom. Number one ticker, KDMN, Kadmon Holdings, Biotech. And first thing you see is on Friday, the volume spike that had been there on Thursday drops off, and we have a little bit of a retrace around $4 resistance point. Not looking too strong right now. Maybe Monday will bring something different.
You know, that $4 sticking point is not leaning itself too favorable to KDMN. And it's, I like the K-band. I like the signal. It's got J-stops, it's got volume, the trend line. It's got a lot of good things going for it from a risk perspective. But at the end of the day, if it's showing that it's struggling at a price point, or it doesn't have a lot of room to have a healthy profit, it doesn't matter what the risk is if it's not moving.
Right. Pass on this one. SMIT, Schmidt Industries, daily. Doesn't really say much for the Friday candle. It has been on a nice trend on a longer term basis. See if the weekly looks nice. Yeah, the weekly looks pretty good. It's breaking up. It does have a high wick on the top, but no, it's just kind of going sideways at the moment, channeling. So there's no real telling which way it's going to go at the moment.
Yeah, I agree with you on that. There's not a lot of confidence, and that's really a pretty. I mean, I like the fact that it does have a trend line and that it held. It went down below that trend line and then kind of came back up on that last candle there. The body of the candle's holding up above that trend line. But that trend line isn't really an exciting slope on it either. It's relatively pretty flat. So not a lot going on right there.
Oh, sorry, brother. Just inconsistent volume. Like you had one big spike here was the last time we even had Volume Genius on. That's what these purple histograms are, folks. They're just big volume coming in on this stock, but not so much lately since November 1st. So move past SMIT, go to SREV, Service Source. Okay, this one looks really nice. On the daily candles here, you'd had kind of a little gap and then refilled, and then nice, we're breaking above $1.50, which is a pretty significant price point. So this one looks pretty fresh.
I like it. It's a little bit long in the tooth as far as looking at trend just from a candle perspective. But if, like you said, if we internalize each one of those candles and really kind of see what's going on, there's some healthy selling going on at that $1.50 mark. And they decided to shoot right past it, and we're sitting at whatever, $1.65. Let's see if on the weekly and monthly we're in completely new territory, or is there some resistance here coming up shortly?
Well, weekly looks clear to the left, so that's actually making it look pretty nice. And on the monthly, it's okay. So it's been a while. The last time it was in above $1.50 was back a year ago, Halloween.
Yeah, and it plowed right down through that $2 on that big red candle. I mean, we're looking closer to $3 of a known resistance on this stock. So there could be some potential for room to run on this. I like it. I also like that K-band coming on, first K-band candle on the monthly. So there's some possibility of this being a continuing thing after that nice big volume spike. So I like what I'm seeing from a risk perspective as it pertains to SREV.
Cool. Yeah, I like it too. See how FLL compares. Okay, we started on the monthly on this one, but that automatically draws my attention. It's nice. It's just hitting that $3 point. So let's see what that looks like on daily. Yeah, it still hasn't committed the shorter term moves. It hasn't really supported a breakout above $3. So sit and wait for this one to show you something a little bit stronger.
Yeah, I'll take a pass. Way too flat for right now.
Cool. EPZM, Epizyme. Friday's movement, not so much. About a doji there. Not so much movement. Looks a little bit better on the weekly than the daily, because this is just, to me, it all started on October 30th, and it's been going for a while.
Yeah, and really the size of the candles, there's a significant volume drop off. Kind of the excitement's left it, you know.
Mm-hmm. Mm-hmm.
Doesn't seem like there's still the same amount of excitement. And when you were on that weekly, you know, seeing it at that 15, that's a significant price point that it just really, maybe that's where shareholders believe that should kind of settle for right now for the time being. And they're comfortable with that. So,
and they'll tell you through their actions with these purple histograms. It's where they all live.
Yep. We'll let them have it.
Yeah. EPZM, EPIX, ESSA Pharma Incorporated. This one is breaking above $5. So on Thursday's candle, it had just closed right there at closed at $5 even. So who knows what was going to happen on Friday? Got some confirmation there, and relatively recent signal in K-band. We want to be in, first or second candle, but that one actually looks pretty nice. Looks comparatively good in the weekly, and then the monthly. It has been in this territory before, but a couple dozen months ago. So yeah, I like where this one is on the daily.
I love that it's holding above $5, and if it continues there, that's the sweet spot. But like you said, it may be a little bit long in the tooth, and not only on the daily, but if we look at it on the monthly, that's significant volume. When we're looking at the candles comparatively to the left, whatever EPIX is getting a lot more volume, is getting these nice fat juicy candles, and we're already looking at 4 of them with a volume drop off so far. Well, I guess the month's not over yet, so jury's still out on that, whether it's going to be building or dropping off on the volume. But 4 candles in. I like that it's above $5, and there's not a lot of resistance known based off this chart right here.
Right.
So it definitely has some things going for it that I like.
Yeah, the more recent behavior is a little bit better than the former behavior, and I agree. This is a half a month essentially, but even if you double it, it's only going to be up to about here, which is a significant drop off if it keeps this pace from the first half of November and the second half of November. So yeah, this one just $5 is significant. So maybe it proves a breakout here in the next couple of days. BDSI, Biodelivery Sciences. This one is finding some nice support at $6 on the first daily candle. What are you seeing, Jess, man?
It is finding support at the $6, but the last 3 days, the highs have gotten lower. However, the lows have gotten higher. So we're kind of getting in a triangle situation here. So I wait and see which way it's going to break.
Okay, yeah, channeling between 6 and 6.25. Yeah, let it go sideways and tell you which way. The monthly actually looks pretty nice. Got some room to go.
But it does look good. But when you look far to the left, there back in 2016, you're seeing the same kind of thing. The only difference was it was on the down and it came back up. We'll see if it flips around on itself here at $6. That's why that channeling or consolidating, I'd like to see that kind of play itself out a little bit before I would make a decision on this one.
Okay. ASPU, going to daily. And on Friday, it found some $7 a ceiling is a resistance line. So it closed at $6.85. So still flirting with $7, and we don't have any K band. It did find some support and stayed above that trend line, which is nice, but not enough for me.
Me neither. Wait and see.
Okay. It's a good buying recently, but not yet. SGEN. Okay. First thing stands out to me is it's these 4 candles of K-band, so it's going up a little bit longer. Let's look at a little bit healthier on that one, but it didn't stop because of this volume spike, which is nice. It actually strengthened the trend upward on the longer term.
I like it, but it just doesn't seem super fresh to me. I mean, really, it's been going up since the beginning of October, essentially. And I mean, who knows? It's one of those things where it could continue for a long time or not. And just looking at these charts, I like it, but I like looking to the left and seeing what past behavior is. We are seeing some opportunities where this thing has gone on 4 or 5 candle runs here, even on the monthly chart. And so on the daily, though, it's kind of sitting there at that 115. And we'll see. There's not much of a wick at the top of it, so it's really kind of pushing that high. And we'll see what it does there after, essentially 4 candles in a row. The only thing that I would like to see with this one is a little bit more volume. I like the fatter, juicier candles. These candles make me make me wonder who and what is actually causing this increase.
Right. And this one first came on, another thing we should address while we're talking about the Daily Dozen is it'll show you the first time it came on so you can compare. So SGEN, November 1st right here is where it showed up first, so you were alerted of its presence, and at least you would have been aware it had it on your watch list if you're adding those in the Daily Dozen. So when the K-band comes on and it breaks that 110 mark, then you can roll with it up to 115. You could be out at this point. That's the ideal position to be in, as I take it away from this chart and the breakout above the former highs.
Yeah, I like that. I'm right with you on that one.
All right. MHO, MI Homes. Not saying too much on the daily. Had a red candle on Friday, but we do have some pretty recent green signal. Let's see if it's $43. So it doesn't really have it's kind of, I'm neutral on it, I guess.
Yeah, not super excited. I do like that it has found some support twice now at that $42 price point. So that's a good sign for potentially it not going down, or at least not going down that far and still having support. I'm not really excited, though, on the upside of it. So
right on. We'll leave it for now. SAFE, Safe Hold Incorporated. Okay, found some a struggle at $36 a share. So I'm definitely not liking what it's showing us at cresting that price point. It is at a high in the weekly and monthly, so just some uncharted waters there. But not for me, not safe.
No, that K-band kicking off, and it may just be some healthy selling going on after a nice little run from 34 to whatever 36 and a half, and there's some selling going on. Or I guess really, that run started back at 32. So if you think about it from a investor standpoint, they're sitting at 10, 15% for those that got in there during that turnaround at 32. So maybe there's just some healthy selling going on. And if it chooses to rebound and work its way back up, hey, I'll have it on a watch list and we'll go from there.
Yeah, there's no telling, but some people take their money out of the stock market this time of year and use it to buy Christmas presents. That's what happens. Why it's happening, we don't care. It's just it is happening. It did lose some share price, so we'll see what happens. And lastly, Daily Dozen, AMD, semiconductors, advanced micro devices. Okay, so on Friday's trading, it found a ceiling at $39 a share. It got all the way up a high of $39.37, so it approached 40, but didn't quite make it. And on the daily chart, you can see this has been a beautiful run, but it is a little bit older now, especially this last burst right there. We're seeing a red candle after some nice higher highs, so I'll look elsewhere than AMD.
Yeah, I think this one, the trend's over, and maybe it's healthy selling again, or it's going to go sideways, but I'm not going to put my money in and let it decide for me. I'm going to wait till it actually proves that it's going to move again before I would be interested in it.
Right on. And I think the nicest ones we saw on today's Daily Dozen, SGEN, SREV, were probably our highlights from this Daily Dozen. For our weekly trade analysis, we're going to go to the master list and bring up Apple. Let's talk about that. Okay, there we go. And so Apple here, we're still on the daily chart. Apple had a nice Friday too. It crested above 265. Let's look at a longer term perspective, since this is going to be pulling off of the Stock Trader Genius data. I mean, just a beautiful run on the weekly chart since the signal came on August 26, 2019. Apple was at, let's see what the price was, 205.86 a share. STG signal came on at that point, and if you were to go off of the the high, 265.78, let's see, 265.78, be a 29.11% gain in 81 days, which is not too shabby to make a third of your investment back in just a couple short months. So Stock Trader Genius knocked it out of the park on this one, and the signal's still on. But if you compare it to the past performance of this risk analysis tool, it fits the bill. And Apple's had good behavior with this in the past, Jess, man. What are you seeing with Apple?
Yeah, it's performed well with the research. What I see on this trend is really multiple opportunities all rolled into one stock. Lots of times we get into something and we decide to get out for whatever reason, and it ends up just getting a second little burst of life and continues to move on. For instance, with Apple, if you look at 220, that has been proven to be a historical level of resistance for Apple. And it did end up flattening out a little bit there the week of September 20th, 27th. Mm-hmm. And then it just resurged and just blew right through there. We even had K-band come off, one of our risk indicators. K-band came off and then it came back on. And Apple really just took off. And at the end of the day, you're not missing out. At the end of the day, it's just a stock that's going to move however it chooses to move. And if you happen to be in there, great. But staying in sometimes too long on some longer trends, we're increasing risk at that point, the longer we're in, because as everyone knows, stocks go up and they go down, and it's just a matter of time. So if anybody was able to take a little bite out of Apple, no pun intended, between the 205 and the 265, good on you. There's going to be plenty more opportunities with stocks that come through, especially with these genius modes, that they assess risk so well that you're able to make some really good informed decisions.
Yeah, the monthly's looking like a nice stair step up as well. I just knew you were going to say bite of the apple, but I just let you have it. Yeah, everything is looking really, really nice for Apple at the moment. And the other dynamic we talk about is the time of the year. For some stocks, it's very seasonal, very cyclical. And one of our local companies, we're both here in Colorado with Vail Resorts. We've looked at that. Ski resorts have seasons where they're very, very productive and generate revenue, and they, do better financially. So cyclical. Same thing with Apple because of what, Jess, man?
The iPhones.
Yeah.
And the holidays.
So all these huge growth quarters are the fourth quarter of the calendar year. So from September through Christmas. So a lot of people are buying a new iPhone in that period. And look at these big long polls. You don't have to know what all these numbers and even these, you don't even really know what they mean. Just that green on top is good, as you've said many times before. And it has always been on top with Apple. That's a good showing. And talk about the third quarter performance, Jess.
Third quarters are continuing to improve every year, which is exciting. So not only is it going up as a whole, but third quarters are improving every year with Apple, and that was evidenced by their behavior. And here we are going into the fourth quarter. I think lots of times as traders, we like to get into the nuance of things and really take a deep dive to really understand some stuff. But at the end of the day, this is human behavior, and it's the holidays, and there's a new iPhone out. What do we expect is going to happen? I think it's pretty obvious because everybody's walking around, with their heads stuck in their cell phones, and a good majority of them, or at least a lot of them, have iPhones. And when your buddy gets a new iPhone, what do you want? You might want a new iPhone, and it just spreads like wildfire for the holidays. So let's not overthink this, and that's the beauty of this master list, is you can see this at a glance. You don't have to sit there and crunch the numbers and put it into graph form to actually see a visual representation about what's going on. It's all right here. Super simple risk assessment tools at a glance. It's a no-brainer.
Right, and this is one we love for a reason that our founders, Alan and Stephen, talk about is you just have to look around you to know if people like the new iPhone or not. That's their flagship product. So you just have to look around you and see if anybody has actually bought it. So go socialize a little bit. I know we're kind of it's a solitary sport, trading and investing, but you got to socialize and just look around in public too. Just what is everybody using? If it's a new iPhone, then yeah, things are probably looking pretty good. Finally, for our long-term trade analysis, let's bring some Investor Genius lists up, and we'll get the most recent. Now, Investor Genius signal will turn on. That's the sapphire here is the Investor Genius signal. The Stock Trader Genius is the diamond. But in this case, we want to look at the November 1st signal on category. There's quite a few of them on that month. We had some good buying recently in the market. So that's no surprise. Here we are mid-month, and we just want to see a couple of the candidates that came on at the beginning of this month and just see how they've done throughout that. Start with Tesla here. What we're seeing from Tesla, if they had, as day traders, we saw them have a couple nice gap days to bring up their share price. So the daily chart since the beginning of October looks beautiful, nice and green, one really big candle there. Weekly, okay, cool. Yeah, it's definitely looking better on the longer term. And then monthly, yeah, a nice building candle, looking strong, looks like about a half of an October candle to me. So the chart pattern looks very good. What are you seeing both on the chart and in the financials, Jess?
On the chart, I'm seeing Tesla coming up to some known resistance there at around 370-ish, maybe even a little bit sooner, maybe 360, 350 range. And we're kind of nudging up there a little bit, I'm not super concerned since we're talking more of an investment situation. We need to be willing to kind of handle some flutter and some downturns and all that good stuff. It's kind of interesting, though, that Tesla is an investment opportunity when you look at it from its historical representation from the investment ratings. They're in the middle of the master list. It's been usually 0 rating as an investment for quite a few quarters, quarter over quarter. And then we're looking at these financials. And as I've said before, and you mentioned, green on top is good when we're looking at financials. And Tesla recently has found some green on top, more so than they have in the past. People love Tesla. And at the end of the day, that company's doing okay, even with a lot of green on the bottom, and its share price continues to move up. So it doesn't really give the stability that we typically look for when we're talking about investments. However, when we look at the Investment Genius ratings, and the Sapphire's got the banner up there, and we look at annualized 109% and compounded 412%. So it still has some performance for itself as an investment. But something just to keep in mind, that this is an atypical investment opportunity compared to more traditional investment ideas with looking for stability.
This one might not be the longest term investment because there is a lot of speculation on Tesla. It's one of those ones, like you said, strong opinions both ways. Some people love it, some people hate it, but that can lead to disagreement. You talked about the range of that disagreement in the graphical sense, 350 to 370, that kind of bounce around area. We're getting to that sticking point. The best thing about getting an eye on Investor Genius or Stock Trader Genius signals as they come on is that if you had followed Investor Genius on 11/1/2019, it's 316.32. It would be your entry price, and that's exactly what this month opened at, and it's closed significantly above that halfway through the month, 352.17. So you're already sitting there, sitting pretty, and you can sell half and lock in some gains. And then it's really, you're just riding the rest of it out. So that's one way to go about it. But that historical performance is a beautiful thing. And if we compare that to NTRS, it's looking really nice on the monthly. We got K-band back. That's this blue tint here. We're just getting Investor Genius signal coming on. And aside from the chop that we're entering, because there is some significant disagreement between buyers and sellers, 105, 110 per share territory. So see how it does there. But what we look for as investors on the longer term sense is, what is the dependability of the company to just meet its basic business functions, like generate revenue, generate income for shareholders. And as opposed to the Tesla histograms, these you can lay a board on, as our man Alan says, and they're stable. And it's going up. When it goes up or down, it's going up most of the time. Same thing with the investor rating.
It definitely provides a little bit more confidence having a historical presence of green on top and really consistent investment ratings. I mean, that 4 investment rating really held for quite some time, and we are currently growing because it's gone 4, 5, and 6. So that's a really good sign. I also like the annualized is 25% compared to Tesla's 100, but compounded, you're looking at 2,353. So year over year, when reinvesting those profits, man, there is, based on the research, there has been a lot of good performance out of this stock with it from a compounded perspective. So, and 25% annually, okay. Versus Tesla's 100, I don't have to worry about as much volatility. I don't have to worry about as much speculation, all that kind of stuff. This would be, generally speaking, at face value, a more longer term investment prospect than necessarily Tesla. And basing on how soon do I need to pay attention to this investment? Is this something that I'll just set and check it out once a month, or is it something I need to keep an eye on every single week in, week out? And Tesla, I think I would spend a little bit more time keeping a watchful eye on it than I would necessarily Northern Trust. but that's part of my process and how I kind of, you know, vary what I'm doing based on the particular stock's historical behavior.
Right. You want to choose your assets based off, Tesla's high volatility. This one seems to be a little bit more stable and steady, of a, horse to ride, if you will. So NTRS looks a little bit sweeter, but it's not to say that Tesla can't break through this historical resistance and really start setting some new marks. So take a look at both. And the beautiful part about the Genius modes is that the performance is posted right there. There's nothing hidden, and you saw me bring up everything's there. It's raw data. You get to make all of your calls, not off of somebody else's opinion, off of your own conclusions based on testing and just looking at the data. It's all there. The past signal on and signal off points for Tesla are right here, and that's what generates those numbers. Same thing for NTRS. So it's all sitting there right in front of you. Base your system off of your style and what kind of risk you're willing to tolerate.